Our guest says the US government's plan to take a 10% equity stake in Intel is, in fact, essential for national security and can help the tech company gain an advantage in domestic markets. We're joined by Gil Luria, Head of Technology Research at D.A. Davidson. Gil, thanks very much for coming on the show.
Thanks for having me.
It's interesting here. I mean, it's not new money, is it? This is support that was already given to Intel that's being converted into this 10% stake.
That's right. The U.S. already had a deal with Intel. It was based on the CHIPS Act, and the U.S. allocated almost $7 billion for Intel to increase its manufacturing capacity in the U.S. And in exchange for Intel creating more jobs, but financially in exchange for some level of profit sharing that was capped. What this really is a renegotiating of that deal. That wasn't a very good deal, and the U.S. has now taken a 10% stake in exchange for those funds. So it's a better deal for the U.S. government. That may not have been possible before because we didn't have a sovereign wealth fund. Now we do. So there's somewhere to put that ownership. It aligns the interests of the U.S. With Intel. And again, because this is a national security issue, this is a place where the U.S. decided that it wanted to convert its interest so it can do more for Intel and capture some of that value.
According to the Wall Street Journal, though, the government also got a 5-year warrant under which it can acquire another 5% of Intel if it spins out or sells its manufacturing operations. Now, the Wall Street Journal warning that could make it tougher for Intel to break itself up because it would lead to dilution. Without just focusing on that, I mean, when you get politicians owning a stake in a company, it does complicate stuff, doesn't it?
Yeah, it does. Look, we're all capitalists. We don't want the government to own the means of production. That's not what we do here. But having said that, in the past, at times of great peril, we have done that. We owned a lot of the industrial capacity around World War II because we needed to make weapons to fight in the World War. This is not that different from the government's perspective. The AI arms race is very serious. We have to compete with China, and we can't have a critical part of that competition being owned by Taiwanese and Korean companies. We have to do domestic manufacturing. The government has said it's not going to be voting shares. It's not going to interfere. We don't even need to believe that. We can believe it for now. But again, the more critical this becomes, the more critical the AI arms race with China, I would actually expect the government to be more involved. In terms of shareholders now, though, they're already seeing the benefits of the government intervention. And just since that was announced, SoftBank came in with an investment. That could come with ARM as a customer. There's more investments coming. There's more customers coming. Just 2 weeks ago, we were talking about the fact that Intel may not be able to move to the 14A architecture because it didn't have any customers. So the government is already adding value. 10%, 15% dilution to the level of value the U.S. can add to Intel as being a critical strategic asset it seems to be a worthwhile dilution.
Does this make Intel stock more attractive for investors?
Well, it has, which is why the stock has appreciated so much over the last few days. But again, going forward, if the government is able to line up more customers for Intel that will help use that capacity in the future for 14A architecture, then that could help Intel even more. It's unclear, though. I would almost have preferred the government said, yes, we're going to intervene and put our finger on the scale. For now, they're not saying that. But I would expect that, again, as the AI buildup becomes more and more serious, we may hear more about government intervention. The company has a chance to execute now, which includes the possibility of spinning off the fab business. If it executes, the government won't need to intervene. If it doesn't, the government might. Let's not forget, the two more critical pieces of the AI buildup are Nvidia's chip design and OpenAI's models. Those companies are executing at such a high level, the government doesn't need to intervene. We're doing great in competing with China on those fronts. We're still in the lead on both fronts. We don't need to intervene there. It's the chip building capacity that was so lacking that we needed to intervene.
Can Intel be fixed in the sense that they've been a laggard for so long, and commentators are saying that the turnaround has been slow in coming?
Well, it's been slow at best so far. I mean, they haven't really done anything to turn it around in several years. Let's not forget, this has been a slow motion train wreck. Nvidia came up with a GPU architecture many years ago, and Intel just watched them do it and wasn't able to compete there, still isn't able to compete there. And then on the manufacturing side, TSMC rose from nothing to being one of the biggest companies in the world, and Intel wasn't able to compete. So they've executed very badly. Can they execute better going forward? We sure hope so. Again, having the government on their side can help. But by the way, it shouldn't be that hard. We talk about, oh, how can they possibly compete with TSMC? They have such better engineers. TSMC just put 500 of their engineers on a plane to Arizona. All Intel has to do is walk up to those folks, offer them twice as much as they're making, and then have all that knowledge in-house. And the cost, by our calculations, would be maybe $300 million a year, which is far less than they've spent on the turnaround so far. This is very much a doable turnaround. Intel just has to start executing.
I don't know, but does the company have a moribund corporate structure, culture, or sometimes organizations can be very hard to fix?
That's exactly right. That's why it's good news that Louboutin took over. Yeah, this is a man who took Cadence from being a non-entity, a small, tiny little company, to being worth tens of billions of dollars by executing well. So if he gets his way, and now he has the government support, that's our chance of having this be a more successful turnaround.
Broadly, how are you handling semiconductor stocks these days? I mean, I guess the big question is, do you overweight Nvidia? Can you remind us of your view on Nvidia, please?
So what appeared to be cyclical at some point now looks more like secular growth for semis. The demand for compute is still growing very rapidly. So if we had previously thought that Nvidia could peak this year and see some falling demand next year, that is no longer the case. The models have gotten so good and we're using them so much, and they're just getting better, even if it is just incrementally. If we just applied with the models as they are today to our work, we would all be a lot more productive. And that's a process that's happening. So that's a really good news for Nvidia. It's reflected in the share price. That's why the shares have done so well this year. Is we went from a point early in the year where we thought this may be peak to now realizing that we have at least a couple more years of data center build out just to meet the current demand. So Nvidia will be fine. But again, the stock is now probably properly valued. And the one thing that to keep an eye on, especially as they report later this week, is China. China's a very big market for them, and they're having issues there. They've been caught in this competition between the U.S. and China China has its opinions, the U.S. has its opinions. In the meantime, NVIDIA's having a hard time selling chips into China and designing the next generation of chips to sell into China. That's where the noise could come from for NVIDIA.
Yeah, it was the latest we're hearing is that Beijing is wary of backdoors, little spying nooks put into US devices, NVIDIA products.
So here's what's happening. So the NVIDIA chips have been smuggled into China at millions, maybe even billions of dollars over the last few years. And the US has started saying, well, wait a second, we're trying to keep a competitive advantage here. And yet our chips are getting into China and they're able to use that to develop their AI models. We need to do something about it. So one of the things we've been doing is started to put trackers in these chips to make sure they don't get to China. That the most advanced chips don't get to China. We're putting trackers in those servers so they can't be smuggled into China. China is now caught on to this and is saying that this is backdoor access. That's not our intent. Our intent is just to make sure that advanced chips don't get smuggled into China. But China, of course, is offended, and now they're saying it's a backdoor. Again, this isn't going to end. This conflict between the U.S. and China is just going to escalate from here. And Nvidia is already losing part of that market in a similar way that Apple has lost part of the Chinese market over the last few years as it's gotten ensnared in this competitive dynamic between China and the U.S.
Gil, thank you very much indeed. Gil Luria, Head of Technology Research at D.A. Davidson.